Hey everyone, this is the Focus Spender, and today I'm going to be sharing with you which did better, my $500 investment in Robinhood or the $500 I received in free stock from Robinhood. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your finances, and increasing your net worth. And if you'd like to follow me on social media, you can find me at Focus Spender on Facebook, Instagram, and Twitter. Now let's get started. So I've had my Robinhood account for a little over a year and 3 months, and I thought it would be great to do an update and see how I've been doing. When I first invested in the account, I took $500 and I invested in 6 different companies, and I chose these companies based off of the Robinhood analysis tools showing what was recommended by them, and then I also did some research to figure out the companies that I would also want to invest in. You've probably watched my video on that first initial $500 investment, and in that video I have a referral link to Robinhood, and I was able to get all of the free stocks that you can get from Robinhood, so you can get a maximum of $500. So when you receive your free stocks, they give you 3 choices. You are not told what the choices are. You just have to pick one of the 3, and that is the stock that you will receive. So it's basically like a lotto or a scratch-off game where there's always a prize. So the reason why I wanted to do a comparison of my stocks that I picked and the stocks that I was given is because there's a study basically saying that if you give a monkey a dart and let them throw that dart at a newspaper with stock symbols 100 times, they will beat the market. And so there's this trial that they did from 1964 to 2010, which was like a computer-based simulation of that theory. And what they found is that these virtual monkeys actually outperformed the market every single year during the entire trial. So I'm not saying what I received from Robinhood was picked by monkeys, but what I am saying is that these stocks that I received were totally picked at random. I really had no idea how they were going to do because it was just me going 1, 2, 3, pick, and then that's what I received. I'm sure you're interested now to see how exactly I did and which did better. So let's get into my account. Okay, so as you can see, my current portfolio balance is $1,245.52. So that's far above the $1,000 I invested from the $500 that I put in and the $500 in free stocks that I received. So what happened? Well, if we go to this Google Sheets that I created, you can see the stocks that I purchased. So I purchased stocks in 6 companies, but as you can see here, this was Pandora, and Pandora was bought out by Siri. So my 12 shares in Pandora has converted over to 17 shares in Siri. So here you can see that I gained a little bit, I lost a little bit, I lost, I gained. This is a net gain, and I lost. So this is the value of the stocks that I purchased. And here you can see the stocks that I received for free. So I received 73 shares of stocks in 15 different companies. And performance was all over the place. So gained, gained, lost, gained, gained, lost, etc. So which did better? Now, I gained $12, a whole $12.21 for the stocks that I purchased myself. So that is a gain of 2.33%. And in the free stocks, I gained $201.74, which is a gain of 40.5%. So clearly, my free stocks way outperformed the stocks that I purchased and picked myself. So why did that happen? I have a couple of theories. One is that the free stocks had the great advantage of dollar cost averaging. And basically that means when you are buying shares in companies, you know, on a consistent basis, and you're going to get into the market when the price is high and when the price is low to get one average price, as opposed to doing one lump sum investment. So with my purchase stocks, I made one investment on one day, and I don't know, the market could have been up that day or it could have been not, but it was just one solid investment. Whereas with my free stocks, every time I got a free stock for a company, it was at a different price. So one company that I received stock in was a company called Zynga, and I received 21 shares in that company. So the prices range from like $3 to like $5, and it just really depends on how the company was doing that day when the free stock was offered to me. Another thing that really helped my investment portfolio in the free stocks is that it is, ranging over 15 different companies, which is about 3 times more companies than in my purchase stocks. So my purchase stocks was just 6 companies, and with the free stocks it was 15. So I got a wide range of companies in a wide range of industries. If you learn nothing else from this video, the one thing you do want to take away is that when you invest, you want to have a wide, far-reaching portfolio. You do not want to put your eggs in one basket. You don't want to only invest in one company, and you don't only want to invest in one industry. And you also want to take advantage of dollar cost averaging, where you're buying shares in the company on a consistent basis so that you're getting advantage of when the stock prices dip down. Because when you purchase stocks on a given day, you have no idea how they're going to do tomorrow. This might have been a high day, this might have been a low day. So you definitely want to take advantage of that. Now, if you have a referral link to Robinhood, go ahead and drop that in the comment box below. And if you don't have Robinhood and you would like to sign up, you can feel free to use one of those referral links. You'll get free stocks and that person will get free stocks as well. I hope you enjoyed this video, and I will see you next time. Thanks. Bye-bye.